Hello, and welcome to myfinanceteacher.org. A quick look at the general stock market and precious metals before we move on to another topic today, that is seasonality for gold and GDX. General stock market is doing well. S&P is giving us a gap up. This is SPY in front of you. S&P itself is at the moment above its 200-day moving average. And in general, it looks like we are continuing the uptrend within the ongoing second short-term daily cycle, starting from the middle of May. As we opened with a pretty big gap up, today will probably take some time during the day in the US to maybe cool off a little bit before a likely continuation upwards over the next few days. And given that this rise in the ongoing intermediate cycle in S&P 500 in SPY has been quite considerable, since the middle of March, SPY has actually gained over 37%, which is pretty nice, and we've actually caught quite a bit of that rally, so I'm pretty happy about that. I hope you are also pretty happy about that. So given a nice move in S&P 500, it's not unlikely that sometime soon we might see S&P 500 take a rest from such an impressive rally. So as S&P 500 and particularly SPY reaches the next resistance level, I will actually consider taking profit on my 50% allocation. I see now that I should have entered with a bigger allocation, but I don't want to chase now with a couple of gaps still unfilled on SPY and S&P 500. So where is that next resistance zone? That of course is based on the March highs, which would be at about 312 on SPY. So once we get close to 310 and just slightly above that, I will actually consider selling the 50% position to see what happens at this resistance level. Moving on to gold. Gold is actually pretty weak at the moment. I don't really like that. If the weakness in gold continues as we approach 1,710, maybe $1,700 per ounce, I will actually have to consider whether I want to sell some of my gold-related positions, particularly GDX. At the moment, GDX is 34.74, and as I mentioned in one of my recent posts for the members at myfinanceteacher.org, the mid-May lows is probably where I might stop out on GDX. That's somewhere at about 33.4. It might be more prudent to stop out right now as GDX has already broken below the 20-day moving average. But silver is looking more or less okay, even though gold and GDX are giving us a red candle right now. Silver is still green, and I do hold positions both in gold as well as silver miners and GDX itself, as well as GDXJ actually. So because silver is still green, I'm still holding the 95% position. Although we're already a little bit late within the ongoing short-term daily cycle, we're already on day 25, so it's not unlikely that we're going to decline from here for another few days. But on the other hand, a bounce up for another few days, followed by a decline, would give us a more clear second short-term cycle, which is also likely. So over the next couple of days, I want to hold and see what happens. Next, let's have a look at seasonality for both gold and GDX. Starting with gold, we see three lines here. The blue line is the 20-year seasonality, which shows average gains in each of the months of the year over the last 20 years. The red line is the same for the last 10 years, average gains for each of the months in the last 10 years. And the green line is for the last 5 years, which might be a bit more important at the moment, as in the last 5 years, in 2015, we've seen a change in the behavior of gold, where the drop from 1,900 all the way down to 1,050 finally turned around. And since 2015, gold has actually been trending upwards up to 1,700 at the moment. So let's look at current month of May. Both over the last 10 years and as well as over the last 5 years, gold has actually lost anywhere between 1 and 2% in May. And even over the last 20 years, the returns were not impressive at all, at 0% on average. We're near the end of May right now. Today is 26th of May, and as we see, gold hasn't really given us much gain since the beginning of May, when this short-term daily cycle has started. But again, I prefer to look at cycles rather than seasonality. However, there is no harm in looking at additional indicators such as seasonality versus cycles and checking whether they are giving you a similar or completely different story. Now looking at June, by the end of June that should be the closing price for the month. In the last 5 years, 10 years and even over the last 20 years, gains have been positive and all higher than the gains in May. So what might that mean for the actual chart of gold price? Well, since the ongoing short-term daily cycle has been going on all the way since the beginning of May, and these cycles usually last for 1.5 to 2 months on gold, what seasonality tells us, although I prefer reading the cycles rather than seasonality tells us that whether we're going to see gold decline over the next few days or rise, in any case, probably sometime by the end of June, we will see the end to the ongoing short-term daily cycle. That would give us a regular duration of 1.5 to 2 months, followed by a bit of a rise into the third short-term daily cycle by the close of June, giving us possibly some gains in June. However, on the intermediate scale, that will be already a little bit late in the ongoing cycle, and those gains by the end of June are likely to turn into the intermediate cycle decline all through July and August, as that would give us another 1.5 to 2 months into the third short-term daily cycle in gold. This scenario kind of agrees with negative gains by the closing price in July. We see that over the last 5 years, July usually closed with a loss of nearly 1%. So to sum up, possibly short-term weakness in gold price, as we are actually observing at the moment, and we will have to decide on our stop losses. But at the moment I don't want to sell my position, as I said, because silver is okay at the moment and because I see June has a potential to give us a nice rally, which is not impossible on the charts. So next let's look at GDX. We don't see a 20-year data for GDX because GDX was only established in I think 2006. So we see here 13-year data, which is the blue line, and 5-year data, since the bull market in gold has started. That's the red line. A similar situation again on GDX. May, especially over the last 5 years, is usually a depressing time for GDX, with monthly losses of nearly 2%. But again, June over the last 5 years, as well as over the last 13 years, has actually been pretty good for GDX, with average gains of around 5% in the last 5 years. So how does that match with the current chart of GDX? Well, again, short-term weakness. Whether I will end up selling at 33.4 or not remains to be seen. And maybe over the next few weeks, after some short-term weakness, we will finally see this rise in GDX all the way up to $39, as we've been discussing in a lot of the recent videos. And that might actually give us nice gains by the end of June, as it usually happens according to the seasonality. So, to sum up, in my personal positions, despite the pretty scary situation, I'm still holding, although I'm getting pretty close to a decision to sell at least part of my positions if GDX reaches 33.4. If that actually happens, I would expect to add back to my positions pretty soon after that, because the ongoing intermediate cycle is still young at only 67 days or so. So that's my view. Tell me what you think, as we can learn a lot from each other. For now, I wish you a nice day and good luck in your trades.